Hello guys, welcome back to my channel. This is Hakman Traders. In this video I am going to be showing you how to how to invest long term in a company like in a stock by looking at its financial reports. Now this video is particularly for those stocks which are not that much popular and are not that much famous, which are not known by the general public, uh, and which are not traded over time. This video is especially for those type of stocks. If you want to apply these steps in the stocks that are traded over time, or the hotcakes of the stock market, then you can do apply do apply them or use these methods in those as well. Like these methods can be used for both of the stocks, but I'm going to specially pointing out those stocks that are not traded over time. So let's get started. As you can see here, this is the company's financial reports. Now by looking at what things you have to consider over here: the number of shares outstanding, revenue, and EPS, earnings per share. These are the three things you have to consider over here. Now the numbers of shares outstanding, these are the total shares that the company has allotted to the public, which they can uh, trade, and the company can also profit from it and grow its business. Now by looking at its revenue, its revenue is positive. It shows signs of positiveness, like it is positive 99.65 billion rupees. It is showing it is positive, and if is negative, if the revenue is negative, it does not shows like it is not good to invest in that stock. Now the EPS, the same is this one. It is also showing a sign of positive, meaning that the stock is also going in the upward. As you can see, it gained momentum over here at this level. So the companies, now what is EPS? Earnings per share. EPS is revenue divided by number of outstanding shares. This is the EPS, sorry, EPS. It is earnings per share. So it is also showing it is also positive. If it's negative, then that's not good, all of the because there is something going on in the company that the company is not telling us, or it have told us and we are not aware of it. Now another thing you want to consider over here is debt. A company's debt should exceed no more than one third of its revenue. Now by saying this, that if a company's revenue is $3 and its debt is $1, so it can easily pay toward its debt. But let's say if it's 3 by 3, then whatever it earned will go to its debt. So that's not a great thing. You should have to avoid these type of stocks. Now you can see here, I didn't find debt in these areas, in this particular data. So if you guys know any website of which shows how to calculate, how to know what is the company's debt, what is a particular company's debt, then do comment that in the comment section below. Do tell me in the comment section below. Yes, let's say if it's 2 by 3, then this is not also not a good sign, because a company earns $3 will give $2 towards its debt. So if it does that, then the company will be left $1. So it means that that company will function and grow in that $1, which is not possible. So do analyze this and back test it, whatever I am telling you over here. So if it's $1, then that's a great sign, like it will remain $2 and the company can easily function and grow its company, or whatever the company is related to, can grow its products or services. um, if its debt is 1 by third of the revenue. Another thing you want to consider over here is that floating shares. Now let's say if the number of floating shares is what are floating shares? First of all, floating shares are those shares, like the company has allotted 78.6 million shares. So let's say the companies have 2 million shares left now, which are left to be traded. Like the buyers have bought all of the shares, and and 2 million is the amount that left to be traded. So these are the floating shares, which will be traded or purchased by the buyers, like which are available to the buyers for purchase. Now, let's say if the companies, like floating shares are less, like it has much less shares to be purchased, then you can invest in that company, like that's a great company. But if the number of shares are more, like the floating share number of floating shares are more, then try to avoid that company. Another thing I want to point out here is that when the number of floating shares is much lower, do take a look at its graphs, analyze that, and if possible, short your position at that level, because the company will definitely come down, and the investors will be taking out profits. Now, if the number of outstanding shares is much larger, analyze the chart and analyze the chart. If it is at its lowest, then then long your position there, invest in that stock. As it reached up, close your position. This method you can also apply. For a consistent amount of profits. Now these were some of the tips and tricks that you can use to profit from the stock market by using the company's financial reports. Well, that's it for today. Hope you guys have enjoyed it, and we'll see you in the next one. Goodbye.